Hello, welcome to our European Open briefing for Monday, September 3rd. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So it's a poor start to the month of September. The risk of that we saw late last week is continuing into this week as markets are becoming increasingly concerned about the trade war between the US and China, which sets to escalate later this week when the public comment period ends on that 200 billion worth of tariffs on Chinese imports. And President Trump has signaled that he will likely press ahead with that next round of tariffs. So we saw a big rebound in the US dollar late on Friday, and we're seeing other safe havens also seeing strong demand. In particular, the Swiss franc has hit multi-month highs against both the dollar and the euro. So another factor adding to the trade woes is that the US and Canada failed to reach a deal on NAFTA last week, with the deadline being on Friday. Though the talks between the two countries are set to continue this week, nevertheless, it does point to the United States' uncompromising stance, and that's weighing on market sentiment. We also had fairly mixed manufacturing PMIs out of Asia this morning, although some nations did report higher PMIs. Overall, export orders were down, suggesting that the growing trade tensions are starting to weigh on global trade. If you look at now at the European currencies, euro is marginally higher today, though it was earlier testing the $1.16 level, mainly on that risk off, as well as ongoing concerns about Italy's debt problems. We saw Italian government bond yields hitting fresh 3-month highs on Friday after Fitch cut Italy's government debt outlook. Sterling has fallen sharply this morning. On the weekend, we had comments by the EU chief negotiator Michel Barnier, who said that he's strongly opposed to Theresa May's Brexit plan. That comes just days after Barnier hinted that the EU would offer the UK an unprecedented deal after Brexit. And if you look at the risk-sensitive currencies, the Aussie and the Kiwi, the Aussie is now moving higher, having earlier hit a 20-month low. The Kiwi hit a 2.5-week low on weak terms of trade numbers earlier this morning. And in commodities, gold is trading just above the $1,200 level this morning, perhaps with the dollar peaking out at the start of trading this week following Friday's gains. That's given gold a bit of a boost. Oil prices are down, though, mainly on the deteriorating growth outlook. If we look at the major performance, we can see the pound is the worst performer, with euro pound at the biggest gainer, and pound dollar the worst loser. And we also have dollar yen also at the bottom of the table, as the yen is broadly higher this morning on the back of that risk of sentiment. And if you look at now the dollar index on the right-hand side, on the left-hand side, we can see it has rebounded strongly, rising back above the 95 level. And if you look on the right-hand side, with dollar Swiss franc, we can see it did touch a 4-month low of 96.50 on Friday, before rebounding to just around the 0.97 level. So we've got that deadline looming regarding the 200 billion tariffs on China. That deadline is on September the 6th. We also had the US and Canada failing to reach a deal on NAFTA. All of that is adding to market concerns about the direction that global trade is taking. So safe havens are the biggest gainers this morning, with the Swiss franc touching more than a 1-year high of 1.1236 to the euro earlier this morning. If we now look at the pound, we can see those sharp gains last week, and it seems to have reversed almost all of those gains this morning. cable did briefly fall below the 1.29 level. It's now rebounded just above that level. So we had several developments over the weekend. EU chief negotiator Michel Barnier did say he was strongly opposed to key parts of Theresa May's Chequers plan regarding the customs partnership with the EU after Brexit. We also had criticism of May's plan by the former Brexit Secretary David Davis and the former Foreign Secretary Boris Johnson, both of them heavily criticizing Theresa May's handling of the Brexit talks, and Boris Johnson has also reignited speculation of a leadership challenge. So all of that is weighing on the UK currency this morning. And finally, having a look at the Australian dollar, we can see it has now reversed all of the gains it made over the past couple of weeks. It did touch a fresh 20-month low, 0.7164 against the US dollar. So we've got those that trade war between the US and China weighing on the Australian currency, which we know, of course, the Aussie is heavily reliant on what happens with China, given China is Australia's biggest export destination. We did have a lot of data as well out this morning. Business inventories for the second quarter grew by more than expected, 0.6% in the second quarter. And we've got the GDP numbers for the second quarter coming up on Wednesday. However, we did get a rather poor set of retail sales numbers, which missed expectations. They were flat in July versus forecast of 0.3% growth. So that did weigh on the Australian currency, though the Aussie does seem to have rebounded a little bit at the start of European trading. Also in focus is the Reserve Bank of Australia policy meeting. They're due to announce their next policy decision tomorrow, and they're expected to hold rates at 1.5%. And looking at what's coming up later on, we've got the European manufacturing PMIs. For the Eurozone, they will be the final one, but for the UK, that's going to be the more important one. That's going to be the first and only release. And that's we don't have any other major data coming out of the US, as the US markets are closed for Labor Day. That's it from me. Thank you very much for watching, and have a great day.